Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And what is going on, my fella Baba former bag holders? Not really sure. Anyways, we got quarterly earnings from Alibaba stock this week, and we're going to talk about what they mean as like an Alibaba shareholder and whether or not I'm interested in either adding to, getting rid of, or kind of maintaining my current position. All right.
Ooh,
So yeah, pretty
okay.
interesting. They reported before market earnings. It was kind of funny because they got a nice pop pre-market, and then as the day opened, they kind of sold off, but it was still up like a 3.5% week, which is phenomenal. So I don't know where to put
Yeah,
that in context.
it really did move that much compared to some other times. Sometimes it like moves a ton. Didn't seem bad or good from someone who did not read the earnings report and was waiting for this video.
Okay, fair enough. Yeah, yeah. Hey man, that's what I'm here to provide. But don't forget, 85% up year to date. That's freaking bonkers level of returns. Okay, so like we really can't be too disappointed when they didn't surge another 20% on this earnings alone.
I am.
Yeah, yeah. I want to be overnight Lamborghini driving crypto millionaires with Alibaba stock. I don't know if you want to talk about the year to date chart here.
So basically, it's really pretty. Looks great. We can see that we're kind of on a downturn. That gray dash line is the 150. Oh boy, I forgot. It's been a while. I think it's the 50. I'll have to double check that. The blue is the 200 day moving average. So
Yeah,
we're still very in a great position.
I'm guessing this dash gray is the 100. We're
I
coming
think you're
close
right.
to 100.
I
Yeah,
think it's
just based
100.
on the volatility of these other
Yeah,
other indices here. Yeah, so we'll get level support around 150 or so. So maybe I should start selling my covered calls again.
don't
We'll
do it.
see. I haven't done that in a while. But this is basically the headline that they put out as far as like their earnings release, saying that not only did the kind of consumer or quick service business perform well, but also the Alibaba Cloud, which is the one people are really kind of focused on here, 34% year over year growth, just phenomenal. Yeah, and it's like 29% if you eliminate intra like Alibaba unit business, so like a 30% growth. This is pretty impressive for a company that at one point they talked about the potential for a cloud being this 30% growth rate, and then they just ended up with like single digit percentages for a while. Like they've actually reignited the cloud growth, and I
They
will
put
say that.
that one guy in charge. He's my hero. Let's go,
Yeah,
man. This is the numbers we've been waiting for forever.
exactly. And then as far as like the kind of what do you call it? Consumer management revenue up 10%. That's the higher profit margin aspect of their Alibaba retail business that people were worried about for a while, where it was even going negative for several quarters in a row. Now it's growing again, and it's growing at a double-digit rate again, which is phenomenal. So both sides of the business are doing great here.
Nice.
So as far as like the kind of major highlights here, the total revenue would have been 15% year over year growth if they exclude the Sun Art into me kind of divestiture from last year. The overall the China cloud e-commerce 16%, cloud intelligence we talked about that 34% again, and even internationally 10% growth. This is a growing business in many aspects of it. Now, is that growth healthy growth? So we're going to get into that here in a second,
What?
though.
Okay.
Why would it not be? Yeah,
Yeah. Why
maybe.
would? Okay.
Yeah, not all
I'm
growth is great.
intrigued.
Yeah. So here is the downside to this growth. So
Oh, okay.
these, yeah, are income numbers. Now, Alibaba, because they're large like kind of investor as well. They do have a lot of fluctuation in their income numbers from quarter to quarter. However, you were seeing pretty large negative numbers here, meaning that they've been able to grow the top line, but they've been growing the top line at the expense of their profitability. Right.
Okay.
So yeah, this is kind of like losing weight by cutting off your leg. You lost weight, but it's
Still
not
effective.
very effective.
Still
In the
counts.
yeah, it does count, but it's a little crazy. So this is why the market was kind of a little. I don't really know what to think about this as far as the earnings report here, and it makes sense that there was a little bit of a pop and then drop.
Okay.
So people were happy to see the growth, but they were not happy to see the profitability. And this is another one that's kind of wild. So I tend to gravitate towards free cash flow, where the rubber is meeting the road. And for a while, Alibaba was outperforming significantly in this kind of area, but wasn't being reflected in their stock price. You're actually watching something that you probably haven't seen before, Dylan. But this is a negative free cash flow quarter. They spent more than they generated by a significant number.
You say I haven't seen that before? Me, who
Well,
shorted Nikola and Rigetti. This is on every single quarter they had. This
yeah,
is
yeah,
all they had. I've never
sure.
seen in all of my shorts. I've never seen it not have parentheses.
Okay, I guess that makes sense. That's kind of funny to think about it that way. I was thinking more like amongst major cap tech companies
Yeah,
in the United States, we don't really see negative free cash flow. Like we've come close to neutral, but negative not that often. And it's not just this quarter. This is for the 6 month ended period too. Negative 5.7 billion USD. They did point out here that they still have a
yeah.
positive net cash position of over $41 billion. So they're basically eating through their net cash right now, trying to stoke their business in both the cloud sector and their kind of core retail business as well.
Can I, because I have not looked at this at all
Mhm.
or done any research because I wait for these videos, I'm going to make a prediction just to see if by the end of this video it happens. I'm completely okay with that being negative as long as there's something about an increase in data center and they're still fully utilizing all of the GPUs that they have and they need more. Completely okay with that as long as that statement or somewhere around it is fine. I'm good.
Yeah, I mean that's foreshadowing right there. I think you may be pleasantly surprised by that then. One of the other things that really got me interested in Alibaba stock is share buybacks. They basically have halted them at this point.
Yeah.
They're effectively just maintaining their current share count, and just avoiding any dilution from stock-based compensation, which is fine. The stock has appreciated 85% so far this year. I don't want to see them aggressively buying that in the market unless they think it's still significantly undervalued, and they seem to have better opportunities that they believe in right now. So management's doing what I think is the right decision from a business management standpoint,
Totally
as
agree.
a stupid guy on the internet. All right. This is another chart that they give us every quarter here, where it shows like what portion of the revenue is being spent in these different places, as far as the different kind of segments here. And this gives you a really good idea as far as like their retail business and where all of the revenue is being spent. Um, Now, as far as the cost of the revenue itself, basically flat. Product development is increased slightly. General administrative, they have kept that down, so they've been a much more efficient company. But sales and marketing is the one that's really crazy here. So it went from 13% last year to 26%
Mm,
this year. That's
okay.
basically their Alibaba instant commerce, where something is brought to your door within the minutes of you buying it.
Okay. Yeah.
Yeah,
I mean, dope. Minutes. Cool. Eventually it's going to
sure.
be teleported.
Yeah, exactly. Or drone service here. Then as far as like their unit segments here, they do give you a little bit of an overview of that. Like I talked about, this 10% growth in the CMR revenue. They had a solid 11/11 festival with double-digit growth, and their VIP members also double-digit growth. So the kind of core business here is growing very well. For them, they are having a significant hit from a profitability standpoint. You can actually see it down here, 76% negative adjusted EBITDA year over year.
Yeah.
That's really from their internal investment. So this is a company that's actively going through an investment cycle in two different aspects of their business. So it's a little bit harder to value, and it's a little bit more trust me, bro, kind of mentality right now from management, which I will give the current management full credit. They actually deserve it as of now. So just we'll have
I
to keep an
agree.
eye on it quarter to quarter.
I agree.
All right.
100%. I'm okay with the trust me, bro, with them.
Yeah, exactly. Right now, yes, completely agreed. And then as far as the cloud segment here, like I said, I did talk about 34% growth, 29% if you get rid of all the other units. That they had triple digit growth for their AI segment again. Just continuing to kind of accelerate there, and they're talking about how full stack is being really big. I'll get into it in the conference call notes here in a second, but there's another metric that they mentioned that was amazing. And this unit is actually positive from an EBITDA standpoint, 35% year over year growth in EBITDA. Just
Nice.
fantastic, right? In line with the
Yeah.
actual top line growth. So nice to see. So conference call note. All right. Major investment cycle, like I said, in two different aspects of the business. So like this is a business that is currently like, I don't want to say rebuilding itself, but that they're reinventing themselves a little bit. So they did say there's a backlog of cloud demand. They still cannot meet despite 120 RMB so far in investments in the last 12 months. They did talk about that 360 billion over 3 years. They have basically met that in the first year here, that 120, and they're saying that they still have like a backlog of cloud demand where they're
Perfect.
able to put this stuff online and being used immediately. All right.
Perfect.
And then even more so, this is pretty crazy. So they mentioned that as far as market share in cloud in particular, and that being a full stack operator attracting a lot more customers, because it's not just their AI products, it's their server space as well, and like kind of more general compute that are being utilized because they're able to offer all of those different products. They have more market share right now than players 2 to 4 in China cloud combined.
Yeah, that's huge. That's
Yeah,
pretty wild.
it is.
That makes me happy.
It is. That is a pretty sucky little fact that they dropped in the conference call.
Yeah.
Um, And then as far as like this talk about AI bubble, it's very, very big right now in the news cycle in the United States as far as stocks go. They did say like they don't think it's a case that not only are every capacity they put on right now being utilized 100%, that the last 2 generations of GPUs are still being used at 100% globally. It's like chips that are 5 years old are still being used on 100%. Now, this is one of the things that Burry took a kind of aim at with the acceleration in terms of or people, kind of all the mega cap hyperscalers, whatever, in the United States, increasing the server, kind of time that they would be depreciated over, is that they're still being utilized. Yes, I understand more modern chips are more powerful and more efficient on like a cost per compute, but there's such a demand right now that it makes sense for these companies to keep these 2 generations old GPUs still functioning at 100% of their capacity. Right.
Yeah.
So yeah, like
It's
I
a
think that
pretty big argument against Michael Burry, what he said. I mean, that's pretty huge just right here.
exactly. And they as far as like the Alibaba retail business, they did talk about how they have like this as far as instant commerce, like a 3-step plan at least for now, where they grew the business, they were successful in that, and now they're trying to optimize it from a cost standpoint. They said from September, I think it was, is down 50% in terms of unit economics, and decreasing their cost for delivery, and that they've seen average kind of delivery tickets going up, and that the kind of active users have gone up. So a lot of positive metrics in that aspect as well. So hopefully over time we're going to see it start to decrease from a kind of a headwind in terms of their profitability and eventually become a massive accelerator for their future growth. I think that's very possible. They did say that even I think it was in the coming quarter we'll see it get to more like a EBITDA flat territory from a
Okay.
standpoint of this instant commerce, which is be amazing if they can turn it around that fast and no
That'd be
longer
crazy fast.
have it eating into them. Exactly. They did say that really depends on what their competitors do, though, and that they may have to kind of adjust things to match them. But yeah, it's exciting to see that they're winning in both aspects of these business in terms of their reinvestment, and they're reinvesting heavily. So I'm pretty happy as an Alibaba shareholder right now. I know Dylan always loves to put me on the spot as far as like when I would buy more, that sort of stuff, those sort of things. I am currently not interested in buying more unless I saw the stock below, I would say 125, so in the ballpark. That's kind of me giving you like a little margin of safety because realistically it's probably worth somewhere in this like 150 territory at least. I think that's a fair value at this point for it. So I want a little discount off of that before I even consider buying any more. Um, but I'm not currently that interested in increasing my Alibaba exposure.
But not selling.
No, definitely not selling. This is very, very positive. Is as someone who's been an Alibaba shareholder for a few years now, listening to all these conference calls, the tenor seems to have changed, and it's definitely a positive atmosphere where there's faith in management, and management is aggressively investing in areas of opportunity that they see. They're no longer running scared from like the Chinese Communist Party like they were a few years ago, or those sort of things. This is like a winning mentality that they seem to have.
Nice, man. All right. Well, I feel better.
Yeah.
Cool. It's really hard to not like look at any news and wait for this video. It's very difficult. All
Yeah.
right, guys. Let us know what you think. Happy, sad, buy more, sell, world's ending. It's all a simulation. Just let us know.
Yeah. Catch you next one.